One of the key charges made in the Hindenburg report about the Adani Group is that the stocks are seriously overvalued as of January 24th. So to speak about valuations, we thought we should get the guru of valuations, the dean of valuations, Professor Aswath Damodaran, who teaches finance at NYU Stern. Professor Damodaran, thank you very much for agreeing to speak to us. We're going to primarily speak about your recent blog, where you have mentioned that you would value the Adani Enterprises stock at 945 rupees. Let me start over there, since that's a very tangible start. What are your assumptions? You say you've taken optimistic assumptions. What are those?
What I see in the Adani, I mean, forget about all the Hindenburg Group, all the stuff in that report. What I see in this business is a company that invests in infrastructure investments, which have long gestation periods, require huge capital expenditures up front, and are not that profitable. It's the nature of the business. So when I approached the valuation of Adani Enterprises, that's what I brought to the game. I had to bring in the fact that this is not a business that can generate 30% margins or 40% margins. You're going to be lucky to get to 6 or 7% margins. The global average for infrastructure companies is about 4.8 to 5%. So at 7%, I'm already pushing the limit on what those margins will be. And even if you assume that they can continue to grow at the torrid pace that they've maintained for the last couple of years, there are only so many airports you can build, so many ports you can construct, so many infrastructure investments you can make. So I thought I tried my best to bend over backwards to make optimistic assumptions, but I had a tough time getting past 1,000 rupees, 1,200 rupees per share. So that was, and that was where they were trading before the last 18 months. I don't know what the ratchet was that caused the price to jump as much as it did. But to me, at the 3,800 rupees it was trading at the start of the year, I just can't get there with the kinds of businesses they're running.
Okay, so you have assumed 7% margins and 24.5–25% revenue growth, because that was the growth between 2002 and 2015, you point out.
I actually give them 30% revenue growth for the next 5 years. I actually assumed that there'd be even, part of it is from existing reinvestments starting to pay off, and infrastructure investments take a while to pay off. So I actually gave them 30% revenue growth for the next 5 years and pushed the margins over time to 7%. Right now, they're at 3.6% margins, so that's almost a doubling of the margins.
Okay. I believe they also have shares in some of their subsidiary companies. Would that add some more to their value?
You know what? They're all in the same boat, right? All their businesses outside of the food business are the same kind of business. In fact, you got to give the Adani Group credit. This is not the kind of business that most companies want to be in. It's a messy, long-term, capital-intensive business, and it's almost like the Adani Group. That's their focus. It's on those types of business. So you take port, you take power, you take energy. Every single company shares exactly the same characteristics. Big investments, capital intensive, low margins.
Okay. Yeah, fair enough. And much of this, as you point out, has been built on debt. You point out that percentage of net debt is 91% of the capital, and equity, percentage of equity, is just about 8.7 in the first 15 years, 2002 to 2015, actually. So
that's a new
will that come
raise.
to bite?
It's not a debt ratio. It's the amount of new capital they've raised has been almost entirely debt until the last year and a half, whether driven by lenders' concerns or the fact that the market cap was so high. They used a little more equity in 2021 and 2022, but this is a company that's been reliant on debt for their growth. There's an old saying, what a tangled web we weave, and I won't finish the sentence, but I think control has driven the company to do things that you look at and say, why would you want to do that? The answer is, this is a group that values control over almost every other objective in the company.
Okay. Since you say that you're not able to support the price at, the kind of current valuations, what would your advice be if you were asked to the MSCI, to other indexes? They are in the Nifty as well. Do you think they should not have been included in the index in the first place?
No, I think MSCI should do whatever the market. I mean, if the MSCI started valuing companies, we'd be in big trouble. Those guys couldn't value a $20 bill in a brown paper bag if you put it in front of them. So I think they should take the market cap. It's not their fault that the market pushed it up. I would have an issue with the kind of unquestioning bullishness that's gone into pushing the price up. I mean, this is not a retail stock, so you can't blame retail investors. But there's something that's pushing the price up with no counter on the other side. And I think that's concerning when you have this. I mean, this isn't a tech company, a young company. We should see a ratcheting up of the price as much as you did in 2021 and 2022. So that is troubling to me that the market would let the price go up that much for a company that you look at and say, that company, you shouldn't see this much of a jump in the price over a short period.
Okay. Who do you think should have blown the whistle? You think it should have come from the regulators, from the capital market regulator?
You know what? We get the regulators we deserve. I mean, much as Indian investors like to complain about regulators, they've been on a bull run where they really haven't wanted the regulators to stop them from making money. You know, I find Indian investors start to talk about regulators only when they lose money. Regulation cuts both ways. So I think that, you know, we need to accept the fact that investing comes with risk, especially in equity, that losing money is just as much part of the game as making money. And we can't keep running to regulators every time we lose money, say, save us from our own mistakes. So I think that in a sense, we're assigning to regulators powers that they cannot bring to the game. They cannot protect us from our own greed and our own mistakes. And I think sometimes people need to make their own mistakes to learn the lessons. In this case, they're going to be institutional investors who learn the lessons, green bond holders who will lead you know, those are the lessons you need to learn in marketplaces.
Fair point. Well, to be fair, the Reserve Bank has very strict caps on how much banks can lend against shares, and those caps have come in very handy. The borrowing from Indian banks is remarkably less than it has been from global bonds.
And that part of the Hindenburg report, I could not quite get why they were making such a big deal. I don't think it's, you know, the market cap that's been pushing the debt. This is something that predates the jump in the market cap. This is just it's in the company's DNA. They don't like to issue equity. That's the reality. And it's like pulling teeth to get them to even give up 1%, 2% of their holding. And I think, in a sense, it's a bit of a tragedy, because I think this is a company with competencies, which has, you know, which has something, you know, really good to bring to the economy. And I think in the zeal to preserve control, they might be risking all those core competencies. We need infrastructure in India. We need companies that can do it right. And I think the Adani Group is one of the few groups that does it right. And I think by putting control over everything else, they're risking that reputation they've built in that business.
No taking away from their excellent execution skills. They have already, some infrastructure projects to speak of. Well, Professor Damodaran, can you tell us about the Hindenburg report itself? You have said in some paragraphs that they're indulging in hyperboles. Which part of the report do you think is kosher, is correct, and which is not?
I think it's a mix of, and I call this disclosure diarrhea. When I see these reports that run to, 50 pages, hundreds of bullet points, big points, small points, I think it's a mix of stuff. There is some, I think the 38 shell companies, which, that they pointed to, that is serious. I mean, nobody starts shell companies without some reason that is not that good upfront, whether it's the Cayman Islands or it's Mauritius, it's taxes, it's control, it's getting around the rule. So that part I think is serious. And I think the Adani Group has to deal with that and tell us what exactly is going on. Some of it is, is circumstantial. Like, when you see the stock price go up and you point to the fact that there are these groups in Mauritius that are holding shares, there's a link there that's not quite made, which is for the price to go up, you need to trade. So I was looking for information about trading volume jumping in the last 18 months, and I didn't see that. And there's some that, there's a lot of, of guilt by association, where the names and these people have been barred. I mean, that I think really, it's neither here nor there. If I start putting guilt by association, there are very few individuals who can pass that test. So I think it's a mix. In fact, that's why after I read the report and, after about the 50th bullet point, my head was swimming and I said, I need to organize what these complaints are about. And that's why I drew that little picture of, the three big areas where I think the Hindenburg Group is raising issues. One is about using the shell companies to move earnings and revenues around, to cook the accounting irregularities. And that part is fairly weak, if you ask me. There's not that much evidence presented that revenues are getting pumped up at the Adani companies or earnings. If they're manipulating earnings, they're doing an awfully bad job because their margins are only 3.6%. The second big piece is about the price manipulation and how they think the market cap has gone up. The strongest evidence for that is the jump in the market cap, but there's no direct evidence offered for that. And the third piece is, I think it's almost implicit that the institutions have either have looked the other way, or worse, have kind of helped the Adani Group do things they shouldn't. And the banks, the exchanges, so that's kind of left implicit. So basically, you can take every point in the Hindenburg Group and put it into one of those three buckets, and judge for yourselves which of these assertions are serious and which are not. And when you throw that many critiques at a company, you run the risk of the big stuff being kind of mauled by the small stuff. And that's, I think, what's happening with the Hindenburg report, is there's just too many things being thrown into that report, and some shouldn't even be in there.
Okay. Now, how can this share move from here on? Do you think that others will also value the share at around 945,000? Or do you think the share can swing even lower because of the debt problems? Debt has to be refinanced, and people may be less willing to give more debt exposure to them.
I'm never arrogant enough to assume that my valuation is going to pull the market price towards it. And I am respectful enough of market momentum to know that tomorrow we could wake up the price at 3,000 rupees per share or 30 rupees per share. I mean, this is a momentum.
May I interrupt you, sir? May I interrupt you, sir?
Yeah.
What I meant was not that because of your report it will come to 950. I'm just saying that
Oh.
others may also have their fair value, which could be around this level. But will it even stop there, considering that debt will come up for refinancing?
When momentum shifts, it never stops at fair value. It'll just push through. In my experience, when things start to spin out of control, the price will drop. It'll drop below the fair value. I mean, you'll swing back and forth across. So there is this very real danger of this becoming, something that feeds on itself and pushes the price down. So I think the next few days will be critical on that front. I mean, especially the week that's coming up, because if you're going to get people watching other people sell and decide to sell as well, and the bondholders start to pile on, this could very quickly become a food fight that pushes the price down well below the 950.
Okay. Well, I need to take a break, Professor Damodaran. I'm back in a jiffy. Just a few more questions. Welcome back to this special chat with a person whom we can call the Dean of Valuations, Professor Aswath Damodaran. He has just written a blog on how he would value Adani Enterprises after the events of the last 2 weeks, and he values it at 945 rupees after some generous assumptions of 30% revenue growth per annum and 7% margins. Even then, it's 945 according to him. Professor Damodaran, thank you very much for your patience. I wanted to ask you, are you going to attempt evaluation of the other companies as well? Adani Power, Adani Transmission, and the other companies. Yeah. There are 7 of them listed. Yeah.
I'll make a confession. I knew nothing about the Adani Group coming into about 3 days ago, other than things I'd heard about them. So this was, there's an advantage to that because you start with a blank slate. You have no priors. The disadvantage is I had to start from scratch on the financials, and I spent Saturday looking at Adani Enterprises. And I think next on my agenda, I have to look at the other 6 publicly traded Adani companies to see what they're trading at. My guess is you're going to see the same kind of phenomenon you saw with Adani Enterprises, which is the soaring of the price to start the year, a correction, And I'm not sure that all of them will be overvalued, but the only way to find out is to value them. So that's next on my to-do list for the next week, unless some bigger story gets in the way.
Okay. No, I'm asking because there is group exposure, as you point out, that one of the reasons why you won't buy at 950 is that in all conglomerates or family-run conglomerates, there is always a chance of debt and capital slipping from one to another. Therefore, even in this valuation, we have to be cognizant of others' group stocks valuations.
The key word is trust, right? When you buy a family group company, you're trusting the family to not take you to the cleaners, because the reality is you're exposed. You're exposed through legal transaction. I'm not even talking about them breaking the law and moving stuff around. You're exposed in legal ways in terms of transfer of wealth, intra-company transactions that can shift wealth around. So whenever you buy a family group company, there is an element of trust, which is the reason if you go back in time and look at how investors in India used to invest, you invested based on the family groups that you trusted, that you said, that family is not going to take me to the cleaners. The problem with an episode like this one is it shakes trust. When it shakes trust, you're saying, can I trust this family to essentially make sure my interests are being protected, whether I'm buying Adani Ports, Adani Power, Adani Transmission, because you are exposed. So I think that's one of the dangers coming out of this is you're going to have a spillover effect of loss of trust. And it's in the Adani Group's best interest to now come in and kind of set those fears to rest as best as they can. But, there is clearly a spillover effect. I've never liked buying family group companies because of that need to trust the family. And in a case like this, I'd be even more wary because of what I'm seeing unfolding around me.
What would be your advice to Indian regulators or the government?
I think don't be defensive. Don't try to pull the patriotic card on this one, because I've seen some of them do it already, that this is a foreigner coming in and rocking the boat. That to me is the worst possible reaction. Use this as a way of constructively create change. I mean, except that what we're seeing in Adani is not unique to the Adani Group, but there are, I would say that there are elements of it, perhaps not to the same degree, in a lot of other Indian companies. In terms of price manipulation is probably too strong a word, but using pricing to do other things. So I think that to the extent that the regulators look at what's happening to the Adani Group and say, we need to make constructive fixes to the way we write our rules and we enforce our rules, that'll be a good thing that comes out of this.
Okay. Since I have you, I can't miss asking this question. We had this very strong jobs report, and even before that, not and even, but before that, for the past, 5-6 weeks, we have seen an almost bull rally on the NASDAQ in anticipation that the Fed will slow down. I think from a low of about 10,500, the NASDAQ has gone to 12,000 plus. So now what's your valuation comment on the NASDAQ? Do you think that it can go off to the races and the worst of the valuation complaints are over?
No, I think it's an illustration of the fact that how little we know about where markets are going to go. I have very little patience for people who claim that just by watching the Fed, you're going to be able to tell where the markets are going. I mean, I think Fed watching has been taken to an almost absurd point where every FOMC meeting, everybody watches every word that comes out of it. And I think that the market is in one of those phases where it thinks it's figured out how the world is going to unfold. In fact, I have to tell you as a warning that in September or October of last year, we had this brief phase again, 4 or 6 weeks, where it looked like the market had figured out what's going to happen. And at least as of right now, here's what the market seems to be pricing in. It seems to be pricing in the expectation that even if there's a recession, it's going to be such a mild one that will have no effect on earnings, and that inflation is going to go away quickly. That's what it's building in. But reality as a way of intruding, we'll find out whether inflation has in fact gone away. So I have a feeling that you're going to have good months and bad months through 2023, but inflation and the economy are going to be like dancing a tango all through the year. And one month, one's going to dominate, the other month, the other one's going to dominate. For the moment, though, enjoy the glow because it is, I mean, it's been a good few weeks for the NASDAQ stocks.
Okay, so perhaps more trading rather than investing at this time. Professor Damodaran, just a final question on India as well. We also ran up something like 21, 22 times. We were about a couple of standard deviation points above our mean, our 10-year average valuation. Do you think that thanks to Adani or thanks to China attracting some of the funds, we are now in fair territory, the nifty companies, I mean?
No, I'm reluctant to pass judgment in entire markets, but the India story has legs, right? I mean, there's a reason it's got so much reception among foreign institutional investors. When I look at China and I have this theory about life cycles for companies. That life cycle can be applied to countries. China's high growth phase is done. They're now a slower growing. I mean, when you're the second largest economy in the world, you can't grow at 10%, 9%, or even 6%. So what you're seeing in China as a slowdown is not temporary. I think it's long term. And the question then becomes who's going to be the next big growth engine? India brings one huge advantage to the game, which is 1 billion people plus, and it's got the resources to be able to be the next, I wouldn't say the next China, but the next piece that's going to do what China did for the last 20 years. But there are lots of roadblocks along the way. This is just one roadblock by itself. I don't think it changes the game. But I think it shows you that the Indian story, while it's strong, has weak links. And when you have weak links, you need to work on those weak links. And from that perspective, this might be good for India to get those weak links in the open and talk about, hey, what can we do as a country to fix that?
Okay, on that optimistic note and a lesson for the future, thank you very much, Professor Damodaran, for staying up for us. That was truly educating.
Thank you.
Well, with that, we wind up this special chat with Professor Aswath Damodaran, who has valued the Adani Enterprise share for us. Thank you very much for watching this special show.